Hey everybody, it's Buckshot here with a weekly Buckshot. So today I'm going to answer the question, why does crypto and buying cryptocurrency, why does that not break my investing rules? A lot of people have been on my case about this lately. They say things like, what happened to real assets, man? I mean, even my wife gives me a hard time about this. Anyway, nothing happened to that real asset philosophy. It's still there. My investment philosophy in reality has not changed at all. In fact, I don't actually see what I'm doing with blockchain and cryptocurrency as investing, right? Now let's go back to basics and talk about what I think of when I think about how to create wealth with investing. So I have this idea of this equation. For those of you who like math a little bit, you'll relate with this. Wealth is equal to, and then it's a product of three different variables, and those variables are leverage, velocity, and mass. So leverage, of course, I'm a big fan of good debt. It's really hard to amplify your wealth significantly without leverage, and it doesn't have to be scary and risky. Wealth formula banking is a great example of that. In wealth formula banking, you can invest in two things at the same time with the same money. That's leverage, right? You're basically you're creating amplification of one thing. That's leverage. Velocity is simple. It's basically the idea that the money you get back from these investments, you're not going to go spend them. You're going to actually reinvest them. The wealth advisors like to talk about this in terms of the magic of compounding interest. And that's what they mean by it. It's basically each time you get money, your original principal is higher, so you make money the next time around. That's all velocity is, and that's another major variable. But mass is the third thing, and it should be intuitive, right? Mass, when I talk about mass, I'm just talking about how much money you actually invest. I mean, that's why it's in the equation. The more money you invest, the more you can use velocity and leverage to amplify it. The cruel reality, believe it or not, is that if you don't have much mass, if you don't have much money to invest in the first place, that leverage and velocity alone are only going to get you so far. And I'm going to tell you that straight, because I think that what drives me crazy is when I listen to other podcasts or when I listen to other financial bloggers, they seem to ignore that, right? If you've got no money to start, you don't have an investing problem. That's not your problem. Your problem is you have a money problem. You have no money, so you have to figure out how you're going to make money. So in other words, figure out how to make the money, how to create the mass, and then you worry about investing. And again, it drives me crazy to watch these shows, because you'd think, well, gosh, I'm broke, but all I really need to do is buy a rental house. No, it doesn't really work that way. No, you got to figure out how to make money and then buy things and create real wealth. Now, most of my listeners, and maybe it's you, are high-paid professionals already. A lot of doctors and software engineers, etc. And so you're at a big advantage, right? You already have mass. You already have money to invest that you don't go just towards paying your mortgage or your car payment or whatever you have. You have money that you can actually throw into investments. And, if that's you, you know what? You're in great shape. Use the rest of the equation. Your money will grow at a pace that will get you to financial independence sooner than it would be possible with conventional financial instruments like mutual funds. So where am I going with this? I'm not investing in cryptocurrency, right? I'm not investing with it. I'm seeing an opportunity to create significant amounts of mass. I'm trying to create more mass to put into that investment equation. And what will I do with that mass if everything works out, and hopefully it will? I'll invest it. I'll invest it into real assets, and then use my mass and then the tool of velocity and leverage to amplify it. That's what I'll do. Now, I don't deny that this whole cryptocurrency market is speculative. It is. There's no question about it. One of the most volatile market I've ever seen, the most speculative market I've ever seen in my life. But one of the advantages that people with money, who have got money that they don't have to live on, is that they can take a few shots down the field once in a while. And that's sort of a football analogy, right? It's sort of like you're trying to get a bunch of yardage all in one throw, and that's taking a shot down the field. I also like to call this an asymmetric trading maneuver. Again, think about it. It's first down, and say you're most of you guys, I don't know, maybe you watch football, hopefully you do. That's what I do with my spare time. It's first down, and you got 3 more downs, and you're not moving on the field as fast as you want to. Quarterback drops back, launches one for 50 yards. If the person catches it, they got a touchdown, or they're within striking, really easy red zone striking range. If not, well, they're second down and third down still. It's an asymmetric trade. And that's what I'm doing. If you know what you're doing, and if you won't lose your shirt, if you lose all that money, I'm not going to dissuade you from potentially making some of these maneuvers that could be life-changing amounts of money. So let me give you an example, because, with cryptocurrency in particular. So today, what we're in like mid-January 2018, I didn't start investing in cryptocurrency in any sort of way until my birthday of this year was September 8th, and I turned 44. That was only, 4 months ago? Something like that. Anyway, I put in $50,000, and then a month later, I put another $50,000 in. So yeah, I put in $100,000 into something highly speculative. But then again, people in my income range, they do things like buy Maseratis. and I can guarantee you one thing: if you buy a Maserati, if you buy Porsche or whatever, unless you're buying some vintage thing or whatever, you're never going to see that money again. I mean, that's just a doodad, right? That's what Robert Kiyosaki calls a doodad. It's a toy, and that's okay. And I'm not saying there's anything wrong with it. I'm just putting things in perspective. In my case, so I had this Toyota Prius still, and I'm actually sentimentally attached to it because I brought my 8-year-old daughter home from the hospital in it, so I'll never get rid of it. But I know I'm crazy, but I still drive it around here because I only have to drive 15-20 minutes a day. And, so what do I care if I'm driving a Prius, a Maserati, whatever. So instead of buying a fancy car, I put it in cryptocurrency. And what happened? Well, and I've talked about this before, you don't do these kinds of things without having some knowledge, potentially some quote-unquote insider information, nothing illegal, just knowing information from insiders. And I did that. And recently even bought some technology that is involving artificial intelligence, etc. Anyway, in about 4 months, I'm about 1,000% return on that in 4 months. So what will I do? Listen, in a year or so, I'll probably, hopefully this will just keep going up, and I'll cash out. And then what will I do with that money? I'll buy real assets, right? Because it's just one more way for me to create mass. I've got my businesses. I'm creating mass from there. I'm creating, and now I've got this thing which is sort of a hobby, sort of just fun for me. And I put a certain amount of money in there. And if I'm making money, then great. Again, it's probably in some regards less risky than a startup, for me at least. Anyway, I'm not telling you, by the way, to go out and buy cryptocurrency. Do not do anything you're not comfortable with. Do not spend money you cannot lose. But on the other hand, you know what? Don't be hesitant to look into things that could potentially generate life-changing mass effects, right? Things that you can take and, you know, really amplify up that equation. And so my challenge to you, why don't you think of, you know, if you're one of those people who is, you know, likes to buy cars and boats and stuff, why don't you skip that doodad for a year and take that money and put it into something, I don't know what, but something that you have some knowledge about, some information, maybe you know the right people, and put it into something that could blow up instead, right? Take that doodad, turn it into a doodad that could actually change your life. Because I guarantee you that, well, I shouldn't say I guarantee you, but at least for me, that it would be more fun doing that than driving around in a fancy car for 20 minutes a day. Anyway, so there you go. My investment principles have not changed. Now, if somebody could just explain that to my wife, we'd be all good. That's it for me. This is Buck Joffrey with the Weekly Buckshot.